All right. Good morning, everybody. Good morning, all you magnificent melonheads of the world. Happy Monday, everybody. Today is August 18th, 2025. The new week is upon us. And the top story this morning, it's kind of an interesting one. Bitcoin is selling off again here. We're down around $115,000, down about $2,000 from yesterday, down about $3,000 from where we started the weekend. Now, by itself, a $2,000 move in Bitcoin is not really that big a deal. Bitcoin's notoriously volatile. You may be thinking to yourself, this is a nothing burger. And look, I'm probably right there with you. But the reason why Bitcoin is down could be pretty important. The Bitcoin market, the crypto market in particular, started to sell off very hard last week when we got that PPI reading. And that PPI reading, I remember we were talking about that live on the air after it came in. It was surprisingly high. And that has caused a little bit, emphasis a little bit, of a reset of expectations for Fed rate cuts in September. Now, the market is still viewing those Fed rate cuts in September as a near certainty, something like an 83% likelihood that the Fed still cuts. We'll get a big clue into that on Friday when Jerome Powell gives his annual speech at the Jackson Hole Symposium. Now, Powell could come out on Friday like a hawk. He could come out and he could continue with this whole wait and see approach that the Fed has taken for the last couple of months. And look, after the disaster that was the non-farm payrolls report that we got last month, where they downwardly revised away all of the jobs gained in the last 3 months, something that resulted in the Bureau of Labor Statistics lady getting fired with, that's always a great sign when they fire the statistics guys, right? The non-farm payrolls was awful. Then we got the CPI, came in lower than expected or pretty much in line with expectations that said, okay, maybe some of these inflation tariff fears have been overblown. But then a day later, we got PPI and everybody said, oh, crap, wait, never mind. It's not that the tariff inflation fears have been overblown. It's just that the price increases from tariffs have not yet worked their way through the supply chain to the consumer. And there's still that big question about, will they? They probably will. We don't know how much. We don't know how much companies are going to absorb in the form of smaller profit margins. And we don't know how much price increases consumers are even willing or able to accept, especially not after what's happened in the last couple of years. And so if consumers just decide we're going to stop spending because tariff-induced price hikes, excuse me, guys, I'm fighting a sore throat. Well, then, if consumers reject these higher prices, well, then what do we end up with? We end up with consumers not buying, and then companies have too much inventory. They start to shut down production. If they start to shut down production, they're probably laying off workforce. And if they're laying off workforce, then the workforce is the consumers. They have less money to spend. Next thing you know, tariffs are actually deflationary. So this moved lower in Bitcoin today, while again, by itself, it's not that big of a deal. It is reflecting uncertainty about what the Fed is going to do. And look, we've got stocks sitting at all-time highs, ridiculous valuations. And if the Fed comes out like a hawk at Jackson Hole on Friday, well, the market is mispriced for that. Let's just put it that way. Also going on this morning, we got an interesting story in the Moscow Times. Russian banks are rejecting 80% of all loan applications. Yikes. Now, look, let me just premise this. The Moscow Times, that's a newspaper that they've basically been kicked out of Russia. Vladimir Putin and Russia, not exactly the most journalist-friendly administration. I think we can say that without ruffling too many of the Russian bot feathers. I'm sorry, guys. I'm really struggling this morning. Anyways, besides the fact that the Moscow Times is how do we say this? Not necessarily an impartial source, but that being said, the data that they're citing, that's from the National Credit History Bureau in Russia. This is government data in Russia. Look, they're rejecting almost every loan application. And why are they doing it? They're doing it because of bad loans. Now, we reported last week, there was an article about how Russian banks, this was in Bloomberg, Russian banks may be going to the central bank or the government demanding a bailout because they are sitting on a pile of bad loans. It's hard to really tell. Anything involving Russia, you're obviously going to have a pro-Western, anti-Putin slant in Western media. Anything everywhere else is going to be like Russia, awesome, Vladimir Putin is the man. So any story involving this country, you have to maintain a questioning attitude no matter what, because there's just so much pre-existing bias here. But these two stories back to back does kind of make you wonder. And we've seen something of a strengthening in the ruble. If lending was drying up, you would expect to see the ruble strengthening. And look, we have Vladimir Putin is showing an unusual willingness to talk all of a sudden. See also the meeting that happened in Alaska last week. Maybe Putin is being pushed from behind because there are financial troubles brewing in Russia. God knows there's plenty of financial troubles brewing in the West. So would it really surprise you? And now look, the meeting last week in Alaska, it went as well as could possibly have been hoped for. We did not end up in World War III, and more talks are scheduled. That is as good as any reasonable human being could have possibly hoped for that summit between Putin and Trump in Alaska. And on a personal note, I couldn't help but notice there was video of protesters out at the ceasefire talks, and I just have to ask myself, who in their right mind, who the hell protests ceasefire talks besides someone who's never been shot at before? Who could possibly want to protest ceasefire talks? I don't get that. I really don't. I'm going to put up a missing poster, like the lost dog poster. Missing, anti-war left, last seen at a pride rally wearing a Che Guevara t-shirt chanting something about no blood for oil. I haven't seen those guys in a long time. I don't know what the hell they're doing protesting ceasefire talks, but I digress. Look, we got the next meeting is going on today between President Trump and Zelensky. Oh, that's good, because the last one went really well, right? Yeah. Remember that big blow up in February? Not really our best moment. Sorry, guys. Jack is clearly struggling with the throat this morning. Look, Zelensky's getting together with Trump this morning. Let's hope for, at the very least, a not bad meeting. Let's do better than February. Start with a low bar, work our way up from there. Maybe it goes as well as the events in Alaska last week. And, again, my hopes, no World War III. Let's keep talking. That's the best I could hope for. Although Zelensky and all the other European leaders are getting together, something tells me this could be a circus. Let's just put it that way. Couple other ones going on this morning. OpenAI Sam Altman says he sees AI in a bubble. That's kind of interesting, considering Sam Altman is the person who created the AI bubble in the first place. Not too surprising, because ChatGPT 5 was a joke. To say it disappointed, I think, would be an understatement. And ever since GPT 5 came out, Sam Altman has been saying things like maybe AGI, artificial generative intelligence, isn't as important, or that phrase doesn't really matter anymore. It does. It just means that he's not going to get there. Look, the AI bubble is running into scaling problems. They've scaled up. The whole idea of this ridiculous build out in the hyperscalers was, we think we're right there, and now we just need to make it bigger, and we'll be smarter than human beings. We've made it a lot bigger to the point where the power grid can't even support it anymore. And then GPT-5 came out, and let's be honest, guys, the thing was kind of dumb. After Altman hyped it up, saying it was going to be like a PhD level expert in everything, it isn't. The freaking thing can't add. And so now you've got articles in Bloomberg talking about AI winter. That's a new one. I've never heard that phrase before. I would call it more of an AI bubble versus AI winter, but yeah, that's going on. Also, interesting, Gamers Nexus put out a video last night, by the way, guys. Link. Son of a gun, this is killing me. Link down below in the description to Gamers Nexus. They did a 3.5-hour documentary about the black market for Nvidia GPUs in China. Spoiler alert, it's really easy to get GPUs in China, something we've been talking about on this channel for over a year now. We've got Air Canada has suspended flights, and they've suspended their guidance after 10,000 flight attendants went on strike. Yikes. Flights in and out of Canada getting hard to find now, and getting a lot more expensive. And interestingly enough, the government ordered them back to work. And the flight attendants said, up yours. They are not complying with the order to go back to work. Kind of interesting to see how that one plays out. We've got the socialists lost an election in Bolivia. Yes. Yay. Viva Libertad Carajo. We've got a second South American country is now rejecting socialism and the inevitable money printing that comes along with it. The socialists have been in charge in Bolivia pretty much constantly since 2006. I think there was 1 year off. The socialists had a little sabbatical, but that was about it in Bolivia. And the rare earth elements are finally flowing out of China. We got an article in Bloomberg this morning saying they're not back to where they were, but the highest in 6 months. Okay, we'll take that. It's not really a win, but things appear to be improving. Guys, we got a lot to talk about this morning, and hopefully my throat allows me to get that message across. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance this morning. Don't forget that like button and that subscribe button for the YouTube algorithm, because we do this one every day when Jack normally is much more articulate. All right now we have got the S&P 500 is up it is down for the morning, off by 5 points, 0.08% lower ahead of the opening bell. We've got the Dow is up by 7 points, pretty much going nowhere though, 0.01% higher. And the NASDAQ is down by 37 points, 0.16% to the downside. So we got two indexes in the red, one in the green. Stocks kind of unchanged this morning, if you will. We've got a slightly stronger dollar, 98.06. That is 21 basis points higher. The dollar is still in this 97, 98 range where we've been for about 2 weeks now. Looking over at the bond market, we got yields are a little bit lower on the long end. The 30-year Treasury is at 4.912. That's down by a point and change. The 10 years at 4.311, down by about 1.5 points. The 2 years at 3.748, off by 1 point. And the 1 month is at 4.359, higher actually by a fraction of a point. Looking over at commodities, metals are doing okay here. We've got gold is up about $6.70, $3,342 for spot gold, higher by about 0.2%. Silver, my favorite of the shiny, is at $38.15 for spot silver. That's higher by about 14 cents, or a third of 1% this morning. We've got copper is down by about 2/3%. Platinum is up by about 1/3%. Palladium is higher by about 1.25%. And WTI crude is at $62.03. That's higher by a nickel this morning for those October WTI futures. Now let's look at Bitcoin's price here this morning. We are at $115,600 is priced on Coinbase. We are sitting right on the 50-day moving average. That's important to watch because that was support back here. What was that? On August 2nd was the last time we hit that level. We did break below that very briefly this morning. Now, what's going on here? Why is Bitcoin selling off? We've got this one in the block this morning. Bitcoin slides to 115,500 as macro data continues to dampen market sentiment. Bitcoin and Ether dropped to notable lows on Sundays as last week's hotter than expected U.S. macro data continued to weigh down on investor confidence. Bitcoin's recent dip reflects cautious investor sentiment amid hotter than expected U.S. inflation, said Vincent Liu, CIO at Kronos Research. Higher inflation reduces hopes for Fed rate cuts, strengthens the dollar, and fuels risk-off behavior. Now, that's important, that risk-off behavior that's being fueled. We're only seeing that in Bitcoin right now. We're definitely not really seeing it in stocks. All right, so it's limited to the crypto world right now. But the reason it's happening, worries about the Fed. If those Fed worries get worse, we could see that spread to stocks here. Bitcoin's all-time high rally, spurred by cooler than expected U.S. consumer price index data, was cut short when the following producer price index for July came in at 3.3% year-over-year growth, higher than previously expected. This likely dampened investor hopes for a possible interest rate cut in September, analysts told the block. Traders are holding back, waiting for clearer macro and crypto signals before re-entering the market, Liu said. Further undermining confidence was the U.S. Treasury Secretary saying that the government will not be purchasing Bitcoin for its strategic reserve, but rather explore a more budget-neutral way to expand the reserve. Now, look, that last part there, that Treasury Bessent's comments that the U.S. won't be buying Bitcoin, I agree that's probably contributing, or at least contributed a little bit to this move lower in Bitcoin. I don't really understand why people were so surprised by that. The government operates $2 trillion deficits right now. How in their right mind could they possibly justify using government money to buy more Bitcoin in that circumstance? It basically turns the government into a Bitcoin treasury company. So I guess I'm surprised that other people were surprised by that. Let's just put it that way. Anyways, guys, the reason it's selling off again, I think largely is because of concerns about the Fed. Now, here's where we're at right now. We're at about 85 to 15. That is 85% chance that the Fed cuts by 25 points in September versus a 15% chance that the Fed doesn't cut. Now, we'll get a little more clarity on this in the not too distant future here when Jay Powell speaks at Jackson Hole. But to be honest with you, after that PPI report and after the disaster of the non-farm payrolls report, it's hard to imagine the Fed being so set on this path. All right. If the Fed has been on a wait and see approach, well, they waited, and what they saw was a lousy jobs number. All right. That's a little bit more towards like, hey, maybe we will cut rates. But then that PPI coming in highest we've seen since 2020, I think. Hard to justify a rate cut with that on the horizon here. Anyways, let's change gears here to this other story going on this morning, shall we? Russian banks reject 80% of loan applications as debt burden rises. Again, guys, I just got to preface this by saying the Moscow Times, all right, this is a newspaper that is not exactly simpatico with Vladimir Putin right now, as most of the world isn't, or okay, I'll say half of the world isn't. So take this with a little bit of a grain of salt. But again, this article is based on official Russian government data. So don't worry so much about the messenger. Focus on the message here. Russian banks are turning down the overwhelming majority of loan applications, with just 21.4% approved in July. That's according to data from the National Credit History Bureau, cited by the pro-Kremlin daily Izvestia. I hope I said that right. My Russian accent, not so good. Between 75 and 80% of applications for car loans and consumer credit are denied, while about 60% of mortgage applications fail despite the availability of government-subsidized programs. A recent cut in the central bank's key interest rate from 21 to 18% has done little to improve approval rates, which rose by less than a percentage point over the past month. The tightening reflects a growing caution among lenders in response to an increase in overdue repayments on existing loans, the central bank said. Delinquency problems partly reflect pressure on household incomes and budgets due to inflation and higher payments on existing debt, said Vladimir Chernov, an analyst at Freedom Finance Global. Economists say the low approval rate is a symptom of Russia's heavy household debt load, which reached nearly 37 trillion rubles, or about $420 billion by the end of 2024. Borrowers who already have loans are unlikely to qualify for new ones, said economist Andrei Barkota. Many turn instead to microfinance organizations, which have looser requirements, or to the shadow lending market, he added. Now, those microfinance organizations, maybe that's like the Russian equivalent of fintechs or buy now, pay later loans, perhaps. According to a survey by state-run pollster, 32% of borrowers in 2024 approached microfinance firms because of their more relaxed standards, while 30% did so after being rejected by a bank. All right, that's kind of scary. The banks won't loan to them, but they're still able to get loans from these microfinance firms, whoever they are. Well, where are they getting their money from? Probably from the banks. But rejection rates are climbing even in the microloan sector, pushing more Russians towards unregulated lenders. Yeah, unregulated Russian lenders. What's the worst thing that could happen there besides finger start going missing and mailed home to family? Yeah, guys, look, this is the beginnings of a liquidity crisis in Russian banks. When the banks stop lending, the economy grinds to a halt. And 80% of loans getting rejected, even if this is being overstated, which maybe it is being overstated, but overstated by how much? And look, this comes less than a month after we had this one in Bloomberg. Russian banks have discussed seeking bailouts within next year. And this article is based on the same premise that Russian banks are being weighed down by non-performing loans. People aren't paying their loans back. And look, a few 100,000 people are on the ground fighting in Ukraine, not at home working, not paying the bills. So I guess I'm not too surprised to see this. And maybe this is why the Russians are suddenly willing to talk. Again, it's hard to tell. There's so much propaganda around this subject. I'm sure I'm going to get it in the comments from one side saying, Russia's great, everything in the Western media is BS. And on the other side saying, I stand with Ukraine and blah, blah, blah. Let's keep the war going forever. I make up your own mind here, guys. This is a very believable story, though. And if you look at the recent strengthening in the ruble, that supports that as well. All right. Meanwhile, we've got OpenAI's Sam Altman sees an AI bubble forming as industry spending surges. Since when is chief hype officer of Silicon Valley suddenly calling for a bubble? Well, that's kind of interesting. Let's read on. OpenAI CEO Sam Altman thinks that artificial intelligence market is in a bubble, according to a report from The Verge published on Friday. When bubbles happen, smart people get overexcited about a kernel of truth, Altman told a small group of reporters last week. Are we in a phase where investors as a whole are overexcited about AI? My opinion is yes. Is AI the most important thing to happen in a very long time? My opinion is also yes, he was quoted as saying. Altman appeared to compare this dynamic to the infamous dot-com bubble, a stock market crash centered on internet-based companies that led to massive investor enthusiasm during the late 1990s. Between March of 2000 and October of 2002, the NASDAQ lost nearly 80% of its value after many of these companies failed to generate revenue or profits. Now, that's interesting. After many of these companies failed to generate revenue or profits. AI companies have plenty of revenue. None of them have profits. None at all. And at the end of the day, if those profits don't materialize, well, then this bubble is going to burst one way or another. And then we got this one in Bloomberg. Interesting, on the same topic here. Is the AI winter finally upon us? The tepid reception of GPT-5 and the sell-off of CoreWeave could be an inflection point or a bump in the road. GPT-5, the long-awaited new model from Sam Altman's OpenAI, was released earlier this month to a tepid reception. If it's a step toward artificial general intelligence, as the company repeatedly said it would be, it's a tiny one indeed. The model was so poorly received by some ChatGPT diehards that the company was forced into an embarrassing rollback, making older models available again. Altman's claim that GPT-5 was like talking to a PhD-level expert quickly became a joke. At the same time, CoreWeave Inc., one of the few pure-play AI stocks, plummeted more than 25% last week after guidance that spooked investors. Revenue growth is expected to be enormously outpaced by capital expenditure increases, and the IPO lockup was coming to an end, which didn't help either. And while it's hard to pin down just how beneficial AI has been or will be in the business world, one piece of research from McKinsey and Company should give everyone pause. While 8 out of 10 companies surveyed said they were implementing generative AI in their businesses, the consultancy group observed just as many said that there had been no significant bottom line impact. Gulp. That's important there, guys. 8 out of 10 companies in Silicon Valley, or in the country apparently, are implementing some kind of AI tool, and 8 out of 10 companies have said it's not saving us any money. It's not helping. All right. If this is the greatest innovation since sliced bread, shouldn't somebody be making money off of it besides Nvidia, that is? The reaction to GPT-5 in particular has longtime AI skeptics taking a victory lap. One of the most prominent, the scientist Gary Marcus, reveled in GPT-5's apparent comeuppance. By rights, Altman's reputation should by now be completely burned, he wrote, alongside a laundry list of seemingly trivial tasks that GPT-5 failed to perform adequately. Author and journalist Brian Merchant noted that Altman seemed less willing to use the phrase artificial general intelligence now that his latest AI still very much isn't that. I think it's not a super useful term, Altman told CNBC. Merchant pointed out that it's a term Altman has often used, including in February on his personal blog. It's been handy in raising billions of dollars. And that's really that last part there, handy in raising billions of dollars. That is what the AI bubble has done best. It has raised capital. It's raised investment cash. It's convinced people to buy stocks. What it hasn't done is made any money. Nvidia is pretty much the only one that made any money off of this. And speaking of Nvidia, I got to send a shout out to Gamers Nexus. All right, this is the thumbnail for the Gamers Nexus video about the black market for Nvidia GPUs. I have put a link down in the description for you guys on YouTube. For you guys watching on Twitter, I will post it in the comments just as soon as this stream is done. This is a long watch, but man, this is packed with information. They made basically, this is like Schindler's List long. This is like a 3.5-hour documentary about how easy it is to just walk into Hong Kong, walk into China, and buy GPUs that are export restricted. And the common phrase that all of these Chinese GPU vendors use when this guy asks them does Nvidia know about this? They say one eye open, one eye closed, which is basically the Chinese equivalent of turning a blind eye to what they know is going on. So you're going to want to check that one out. Again, shout out to Gamers Nexus. They put a ton of work into this report, and it was fantastic. I'm only about 2 hours into it. It was released late last night. I couldn't get through the whole thing before I fell asleep last night, but I highly recommend this one, guys. We've been talking about this on this channel for over a year now. There it is, laid bare. All right, now let's talk about a story developing in Canada. Air Canada pulls forecast, citing flight attendant strike. This is a pretty interesting one for our friends to the north here. Air Canada suspended its financial guidance through year-end, citing the impact of a strike by flight attendants that has caused the airline to scrap its entire flying schedule. Given the effects of the labor disruption and related impact on operations, Air Canada is suspending its guidance for the third quarter and for full year 2025, the company said in a Monday statement. About 10,000 Air Canada flight attendants walked out on Saturday, grounding the airline and disrupting travel for about 130,000 passengers a day during the peak of the summer season. The union is seeking higher pay and compensation for periods that the plane isn't in motion, such as work they performed during boarding. The Canadian Industrial Relations Board ordered the workers back on the job on Sunday and told both sides to go to arbitration. The union has defied the order and said it wants to dismantle the legal process the government is using to end the strike, known as Section 107. If we stick together, they can't fire us all, said Wesley Lasowski, president of the Air Canada component of Canadian Union of Public Employees. So they are defying the order to go back to work. This is kind of interesting, guys, because you have not only a big strike going on, stranding passengers, potentially affecting the economy, but you've got this defiance of this government order back to work. So this could affect labor rights in Canada as well. Keep an eye on this story. And this one just puts a smile on my face. If there's two groups that I like to watch lose, all right, the first is the New York Giants. Love you, Keeker. The second one is socialists. All right, if there's two people I want to see lose on any given day, it's the Giants and the socialists. And well, last night was a good night. The Bolivians vote out socialists after 2 decades in power. Voters angered by soaring inflation and fuel shortages and black market-friendly candidates to overhaul the economy. Bolivia's once dominant left was swept aside in Sunday's presidential election, with voters handing the ruling party the worst electoral defeat in 2 decades, and all but ensuring that the next government will be led by a pro-U.S. market-friendly candidate. In the first round of voting, Rodrigo Paz, a centrist senator and son of a former president, surprised pollsters by taking the most votes on Sunday with 32% support. That's according to Bolivia's election agency. In the runoff in October, he will face a conservative former President Jorge Quiroga, who received 27% support. Amid a deepening economic crisis, Bolivians voted out the Movement Towards Socialism Party, or MAS, which has ruled over all but 1 year since 2006, when Evo Morales first took office. Many voters blame Morales and Arce, who is so unpopular that he chose not to run, for driving Bolivia's economy into the ground. Inflation hit 24% in June, its highest level in 3 decades, amid shortages of everything from diesel to cooking water. The MAS candidate, former Minister Eduardo del Castillo, received 3% of the vote on Sunday. Let me just say that again, guys. The socialist candidate, the ruling party candidate, got 3% of the vote. You think the socialists are a little unpopular in Bolivia now? People have generally stopped believing in socialism and the left, said somebody I can't pronounce, a resident of the indigenous city of El Alto that used to vote heavily for Morales. They want the crisis to end. They want alternatives. They want economic stability. There are shortages of bread, shortages of sugar and rice, and when you do find them, it's really expensive. Enough with socialism in this country. We need a radical change. That's according to Veronica Mamani, another resident of El Alto. So Viva Libertad Carajo. That is the second country to lurch in the direction of pro-business, anti-socialism in the last couple of years. Let's hope this trend continues. As the rest of the world continues to slide into totalitarianism, South America seems to be getting things right. And last but not least, China ramps up rare earth exports after fright for global buyers. Maybe it's not the all clear, but at least things are getting somewhat better here. China's exports of rare earth products, including magnets, extended their recovery in July, months after Beijing threatened a disruptive global shortage by crimping supplies to fight a trade clash with U.S. President Donald Trump. Shipments jumped last month to reach their highest since January, well before China leveraged its dominance of rare earths to hit back at Trump's punitive tariffs. Beijing agreed to resume flows of the U.S. as part of a trade truce with Washington. Data released Monday covers rare earth products, a category typically dominated by so-called permanent magnets. Volume sold overseas rose 69% to 6,422 tons in July. That's according to Bloomberg News calculations. All right, so they're still not back to where they were before the trade war started, but they are trending up in the right direction, up by a significant percentage, the highest since January. Things appear to be getting a little bit better on that front. But hey, trade talks are still ongoing. We've still got this tariff and that tariff and the punitive tariffs. And, we're putting these big tariffs on the Indians because they're buying Russian oil. Well, the Chinese are buying the Russian oil too. So something tells me we're not done making things worse in this department, if I had to guess. Call me crazy, but something tells me we're not done screwing that up yet. And I just want to say hello and thank you to First Last. Thank you so much for supporting the channel. Been a melonhead for 7 months. It says, what if silver is called strategic metal for the U.S.? Well, I'm not sure. Don't quote me on the definitions and the exact policy here. But what I think you're kind of alluding to is if we somehow evoke the Defense Production Act in order to produce more silver, what would that do? That would probably eventually result in more silver coming out of the ground. I don't think it would necessarily move the price all that much in the short term. Silver is still a relatively liquid, deep, and global market. And so I'm not so sure like the whole, if we evoke the Defense Production Act and start demanding that domestic companies mine more of the stuff and subsidizing it, maybe a few years from now, it would result in more metal coming out of the ground. But in the short term, silver has operated at a supply deficit for 5 years in a row now, and I see nothing to suggest that's about to change. So I think silver still remains one of the most undervalued assets in the world, and that is why I like the shiny. Got my little Murica 10-ounce bar right here because of it. Thank you very much, First Last, for supporting the channel. Appreciate that very much. And thank you to, oh man, how do I pronounce that one? How about if I just call you GZ? Thank you so much, GZ, for being a melonhead for 2 months. Yeah, I'm not even going to try. I'll butcher it. He says after 15th of August, 1971, everything is in a bubble. Well, WTF happened on August 15th of 1971, GZ. Could you possibly be alluding to the closing or the temporary suspension of the redeemability of the U.S. dollar for gold that has been temporarily suspended for, what are we now, 75 years or something like that, or 55 years? Man, there's nothing more permanent than something temporary from the government. Yep. Guys, check out WTF happened in 1971. Seriously, if you want to look at all the charts of misery and things wrong in the United States, notice all those charts changed in 1971. It's almost like debasing the currency leads to societal collapse. Call me crazy. Yep. Thank you very much, GZ. I apologize for my inability to pronounce. Hey, Nashville Pasta Man, good to see you, brother. He says, Bridgestone is passing tariffs on to consumers 100%. Appreciate that data point. I'm kind of surprised we haven't seen prices move yet. The only real data we have on companies that are not passing prices on is Japanese automakers. They're like the one big exception. Like the general prevailing wisdom is that tariffs will automatically be passed on to the consumer. It's not happening with Japanese autos. Japanese automakers, they got hit with a 25% tariff. They lowered their prices by 19%. So the consumer's eating some of that, but almost all of it is being eaten by profit margins, which Japanese automakers have very few of. And so the Japanese automakers are probably going to be shutting down production, laying people off. See also that whole rant at the beginning. I do think we are going to see more companies follow suit with Bridgestone here and start passing those tariffs on. The question is, can the consumer take it? The consumer's already in bad shape. And, that is the line that if we cross it, tariffs become not inflationary, but deflationary. If consumers just say, I'm not buying it because I can't afford it, then it's going to cause, an excess of supply. It's going to cause production to shut down. People are going to lose jobs, and eventually prices start going lower. That's deflationary. So we could get to that point. Thank you very much for that data point, Pasta Man. Robert Feeds the Machine says, I'm looking forward to seeing the next clown dance they'll think up to keep the bubble going. My guess is quantum computing. They're already heading that way. Can they top the metaverse cope? I hope, but probably not. Yeah, I think Meta still spent something like $4 billion on metaverse labs in the last quarter. They're still spending more than $1 billion every 3 months on the metaverse. That investment in waterfront real estate in the metaverse is going to pay dividends any day now, guys. Has anybody been to the metaverse recently? How are things in the metaverse? Is that place jumping or what? Yeah, about that. Look, Meta is notorious for setting money on fire, which, by the way, I think Meta will be the last company to cut their CapEx after the AI bubble pops because of that, because Meta shareholders, for whatever reason, do not punish Zuckerberg for wasting billions of dollars. So my guess, what will be the next shiny new thing after AI? Quantum computing. I think that's what it'll be. You already seen some of that starting up today. Thank you very much, Robert Feeds the Machine. And thank you, everybody, for having your coffee with the Melon Heads this morning. Thank you for sticking with me and my sore throat. I appreciate that very much. Don't forget that like button and that subscribe button on the way out, as well as that link down below to the Gamers Nexus video. Cannot recommend that enough. Drop them a comment. Let them know that nobody sent you. Also, hey, thank you guys for the super chats and the support of the channel, as well as you, my magnanimous Melon Heads on Patreon and YouTube. Thank you guys for everything you do for the channel. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.